Okay, MegaWhale team, welcome back to the channel. Thank you for tuning in. I hope you're all having a fantastic day today. In today's video, we are going deep into the macro and the short-term charts, discussing the total cryptocurrency market cap, the daily and the weekly charts, as well as the key levels you should be paying attention to on the short term, whether or not Bitcoin is going to continue to climb higher, or if we're going to see a correction toward the downside. These are questions we're answering in detail in the video, so stick around till the end. Before we do get into it, smash that like button, hit that comment button, and subscribe to the channel. We post daily videos of Bitcoin focusing on the facts, the data, the technical and the structural information. No hype, no BS, no emotion, pure raw TA. If that is the kind of content you are interested in, you can join us on Telegram. That is the first link down below. You'll get access to charts, updates, videos, educational posts, news events, and everything you need to stay in the loop with cryptocurrency, with Bitcoin, and the relevant economic news. And if you are interested in taking your trading to the next level, join us in VIP. We post trading setups with exact entries, exact targets, exact stop losses, trade justification, exclusive analysis, and everything you need to follow along. You'll also get access to our trading setup chat, our general chat, our trading chart and education chat, our daily video, our news, our help, and everything else between. You can go ahead and get access to that with nearly 700 members by clicking the pinned comment of the free channel, by clicking my name, clicking these links to find our trading track record, and of course a video to show you what VIP is all about. Check it out, guys, and let's dive on in. So as we can see, the short-term price action of Bitcoin has been very choppy. We were able to actually get above that critical level of resistance at the 63.8k region for the 4-hour close. However, we did not see the price sustain above. To show you this level once again, drawing a horizontal level, a horizontal resistance on that 6-hour. Let's go to the 6-hour, horizontally across from this local high point. Right over here, we can draw it across. We can see we were unable to really flip that level as a level of support. So we're able to close above. We got above there, but we were not able to breach this major level of resistance and flipping that as support. So we currently are actually challenging this area now as an area of local resistance, meaning we still need to break above this region. We still need to flip this region as a support to facilitate a continuation higher. And while we remain underneath that level, we do run the risk of this turning into, again, a distribution pattern where we end up printing deviation above the range high, only to then see a correction toward the downside. This is a real possibility and something we'll be discussing in the video today. Moving over to the market data, taking a look at 24-hour liquidations and 24-hour volume. 24-hour volume up 39% at 137 billion. 24-hour liquidations up 17% at 135 million. 56 million coming from long liquidations, 79 million coming from short liquidations. Moving over to the DXY. The DXY is still hanging on by a thread at that critical level of 100. We can see this area has acted as a support for over a year and a half. A massive level of support. With this retest, we have also seen a failure to sustain within our symmetrical triangle. We broke below the symmetrical triangle and now we are retesting our base of support. If we take a measured move from the symmetrical triangle and apply that to our breakdown point, that would give us an expected target around about 95, 94 on the DXY, which could be meaning we are going to see a multi-month downtrend for the DXY initiate upon the loss of this 100 point. Now, this would be very bullish for risk assets, sending asset prices up, sending Bitcoin up, sending the stock market up, but likely sending the dollar value down. So moving over to the S&P 500, we can see a fantastic weekly candle close here, guys. We were able to close above our prior high at 5,700. This is exactly what we needed to spark the continuation up to 6,000, which we are now expecting. So again, provided we remain above this weekly high point, we are expecting continuations to 6,000. If we drop a weekly candle back below the weekly high at 5,684, we could see this turn again into a distribution pattern where we see continuations back towards our weekly lows. However, the most likely scenario while we remain above is going to be that continuation upwards. Overall, overall looking very good. So let's talk about Bitcoin. In today's video, we are going over the daily, the weekly charts. Massive detail, guys. We're jumping over to the total 3 because this is super important, this chart. We're going to be talking about the possibility for macro continuations higher, the key levels of support, and even macro targets for the total 3. And again, the total 3 is a representation of the entirety of the cryptocurrency market. We'll be taking a look at Bitcoin dominance and, most importantly, discussing the short-term price action of Bitcoin. Are we going to see this move continue higher? Or will we see a liquidity flush to the downside and liquidate a whole bunch of overexposed longs? That is what we're discussing in today's video, guys. Before we do get into it, again, make sure to sign up to the links down below. BitGet, BitUnix, or BingX. You'll get a lifetime trading fee discount of 15%. That can build up to 45% based on your trading volume. Sign up to those exchanges. Support me, support yourself, support the channel, and of course, get access to those hefty sign-up bonuses and trading fee discounts. We'll play a quick ad and we'll jump into the video. I'd like to introduce our partner, BitUnix. BitUnix is a global, non-KYC, no country restriction exchange, making it a perfect exchange to trade on if you're from the USA, from Canada, the Netherlands, or just prefer to trade without KYC. This exchange is a futures and spot exchange with over 200 different trading pairs, and some of the lowest fees in the game. If you sign up with my link down below, you'll get access to 15% off your trading fees, as well as an exclusive reward center where you can claim up to a multitude in USDT prizes. So go ahead and sign up with my link down below for 15% off, and I'll see you in there. Okay guys, let's go ahead and get stuck back into it. So starting on the Bitcoin chart on the weekly, over the last week, we saw a fantastic move upwards for Bitcoin, going from the lows of 57,500, breaching into the mid 60k region. With that move upwards, we were able to see the first positive momentum shift on the RSI for over 210 days. This, of course, was marked out by the RSI breaking through and closing the pivot above that 200-day long downtrend, officially representing that for the first time within this entire consolidation that's been going on for far too long, mind you, we have seen momentum flip positive. This is a fantastic mark for the bulls, signifying that not only are the bulls in control of this structure, that we are very likely going to see macro continuations to retest the range high and potentially break out. This again paired up with the fact that this is a descending channel formation, which is a inherently bullish consolidation pattern, is really stressing that, again, we are likely to see that break upwards, and the bulls are definitely still in control. If we take a measured move of this structure from the range high to the range low and apply that to the breakout point, we can see the measured move does take Bitcoin well into the $80,000 region. So if we are able to break through this range high, this upper level of resistance, we are likely going to see macro continuations into the 80,000 region. That is about it on the weekly chart, guys. We can show you another scenario over here. This was the prior consolidation. We had that RSI downtrend. This is around 220 days, so about a 14-day difference in comparison to our current consolidation. We saw the RSI break outwards on this candle. Then 1 week later, we saw a break of the range high. I'm not saying we're going to see a break of the range high next week, but what I'm showing you is that momentum, the RSI, momentum can be a leading indicator for price action while within these structural consolidations. So again, we had this structural consolidation where momentum was falling. We eventually saw momentum flip positive, and the price action eventually continued as bears exhausted. But that is really what it represents. It represents that if selling pressure is exhausting when we see momentum flip positive after long downtrends. We are seeing the same thing over here. So the probability for a continuation upwards becomes significantly greater than the probability for a continuation downwards. Now again, everything in trading comes back to probability. Nothing is certainty. Even if something has a 90% probability of playing out, even a 95% probability of playing out, there's always going to be the 5% of the times where it doesn't. So in this scenario, there's a significantly greater probability that we go upwards, well over 70%. But again, there's always going to be that chance we go down. That doesn't mean you should hedge yourself on the lower probability. Personally, you always want to be hedged with something to have a greater probability, because over a broad amount of trades, you're going to come out on top, whether or not an individual trade is a loss or not. So think about that, guys. Let's move on to the daily. This is going to be our daily chart, guys. We can see on the daily chart again how we are starting to see a little bit of exhaustion develop for Bitcoin. So let's go ahead and get rid of our RSI. Let's go ahead and get rid of these lines on the side. We can see we are starting to see the wicks and the bodies change. We went from larger bodies, shorter wicks, to now longer wicks, shorter bodies. This is a good indication that we are starting to come into some resistance and we are starting to see some degree of consolidation in the price action. Whether or not that consolidation is going to turn into, again, exhaustion and then corrections, or again, absorption and continuations, will come back to what happens here on the short-term chart, and we'll come back and discuss this when we get up to it. But what we can see yet again is that horizontal resistance level right over here, that level of major importance we need to flip. From a horizontal perspective, this is going to be a critical level. We had resistance, we retested a support, we retested a support, we finally lost below it, we saw a steep correction. We came up to retest it, we had deviation followed by a steep correction. We have seen one steep correction, two steep corrections, we are now retesting it again. So if we are unable to clear this level, we could see a correction for Bitcoin. Will it be a steep correction all the way down? I don't think so, but we could see a liquidity flush. We could see a flush for those longs before we see that continuation through and much higher. Again, liquidating overexposed positions or late entries. Something to consider. Nevertheless, when we are looking for entries, we enter down at support, we are now at resistance, we are being a little bit more patient, we are watching how the price action develops. You do not want to ape into positions while you are sitting at resistance. If I zoom out, I'm very bullish. I've been bullish on Bitcoin this entire time, but I'm telling you, as we approach resistance, you should be looking to take some profits in your positions and then look to re-enter new positions when those resistance are able to break. Leave some money in as insurance in case it goes upwards. But if it does go downwards, you'll be happy that you actually secured some profit. At the end of the day, why trade if you're not taking profit? Everyone wants to be a successful trader, but nobody wants to take profit. It makes no sense. The whole point of entering a trade is to extract a net profit, is to extract a capital gain. People are quick to enter trades, quick to click the buy button, quick to put half their portfolio on a shitcoin, but as soon as they're at profit, they're hesitant. They don't know what to do. They're taking 20-30 minutes to decide whether they click sell, and they end up just holding back to zero. So you need to, again, if you were as quick as you were to take profits as you were to enter, you were going to be a much more successful trader. Remember, always pay yourself. Let's go ahead, guys, and jump onto the short-term price action. Here is the short-term price action. The reality of this price action is we are at a critical resistance. This is a resistance right over here for Bitcoin to continue upwards. And by continue upwards, we mean break through this level and continue to the range high. So the next move upwards is going to be a clean shot, a quick sweep to the range high. There's no fluffing about in the middle over here. If we break this resistance, we are literally going to go straight up to 67.5, 68K over multiple days or even a week or so. It'll be a quick move. So this is a current resistance. We should be aware that we are now in a horizontal range, which is a neutral consolidation after a large move upwards, retesting an area of resistance. Therefore, what we have seen is we have seen an attempt to break upwards, which is going to be here. This is our attempt. We failed to sustain above that level. This is now marked as deviation. We have seen deviation to the high side of this consolidation. We know that when we see deviation to a horizontal channel, the probability we see an equal and opposite reaction on the other side, the other range of the channel, increases. And therefore, we are now looking for two things. We are looking for, number one, a retest of these lows for potential entries to continue higher. Or number two, we are looking for this horizontal resistance to be flipped as support. Again, now we are looking for a higher time frame confirmation. We are looking for a daily candle close above this resistance. We are looking at a higher time frame confirmation. The reason we look for a daily now is because, again, the longer the price action is able to sustain above a specific price point, the greater the probability is that the buyers are able to establish that level of support. If we just sustain about a 1 minute, if we sustain over resistance for 1 minute, there's a significantly lower chance that that level of resistance is actually flipped to a support in comparison to whether or not we've sustained above it for 4 hours or a week, etc, etc. So that's how we use timeframes. Timeframes don't really confirm anything, they're just used as validation methods to increase the likelihood to see those levels actually flip as support or resistance. So it's contextual really. So if we look at the price action, those are the scenarios we're looking for. When you're looking for the resistance to break, if we do, again, we're looking for that daily close. At the moment is deviation topside, expect correction to range low, therefore we are expecting a correction to range low. We do know this is a bullish structure in the grand scheme of things. We know that we have the weekly break on the RSI, so we are still more inclined to see continuations higher, and therefore if we do retest these low points, we may look for long positions at the range low. If, however, we drop below our sell side liquidity, which is our strong low right over here, our sell side liquidity, if we lose that level, just as we lost our buy side liquidity, we saw strong extensions, okay? If we lose that level on the bottom side, we may see a strong flush to 61.5, possibly even lower. So again, this was our buy side liquidity, okay? We had the break of structure, we saw a flush higher. That happened above the level of resistance. On the bottom side, if we deviate below support, which is very likely to do so if we retest, and we drop below our sell side liquidity, we will see a break of structure and we will see a liquidity flush to the downside, just as we saw one to the upside, trapping late longs, trapping late shorts before we then see that continuation. Those are the scenarios we're watching for. Anything else, in my personal opinion, that happens between the buy side liquidity and the sell side liquidity, anything that happens between here, in my opinion, is going to be nothing more than chop and noise. You should really try tune out of it too much unless you are scalp trading it. You shouldn't be looking at this and saying, oh, I've had a green candle over here and therefore we're going to go higher. Or, oh shit, we had a small red candle over here and therefore that's confirming a correction. No, it doesn't really work like that. We need to see these structural levels break to actually get those validations. Anything that happens between should be expected normal price fluctuation. That is it, guys. Moving over to the total. The total is looking fantastic. Nothing more to say. It's looking fantastic, just as Bitcoin is looking fantastic, but it is not there yet. It is not there yet, nor is the total 2, nor is the altcoin market. Both of these markets are looking very strong. We are getting there. We're getting very, very close, and there's not really much to say other than we are looking very strong. The most important thing we have to see, guys, still, is we need to see these structures break. We need to see these structures turn bullish again. We need to see breaks of these macro descending trend lines, these downtrends we have been in for many weeks now, if not months. Again, if we break through the range high, the total market cap is primed for a very strong move to retest that $3 trillion mark. We could very easily come to retest that high at 3 trillion. That would be fantastic for Bitcoin and altcoins alike. Same goes with altcoins, guys. We've retested a critical level of support. If we're able to break this downtrend, we are looking for a move to 850 billion. Again, that would be about a 30, 40, 50% gain on most altcoins, if not more. Again, we have some massive performers. We've seen some altcoins do well better than many other altcoins recently. Those leading altcoins will likely do much more, but we will likely see most altcoins rise 40-50% if we do see that move. Anyway, guys, I'm going to leave it there. Have a fantastic day. We'll catch you guys in the next video. See you then.